All right. Good afternoon, everyone. Mark here. Sorry I'm running a little bit behind. I usually do these a little bit earlier. So thank you for joining me. So in this session, I want to go over a couple of those groups of stocks, okay? Like the China trade, the renewable energy, and the electronic cars. Because those are some high potential areas, and it's a good idea to keep those on the radar. So I want to review a few of those stocks from each group real quick and evaluate their technical positions. The next thing I want to do then is review our Bitcoin trade, okay, and see how that's making out for everyone. Hey, HS. And then I want to talk about Forex a little bit because there's some interesting areas on like the euro and the pound. I know we don't have a lot of Forex traders. I understand that. But it's still, you can at least learn something from it, even if you don't trade it. Okay, so, all right, so with that being said, hold on a second. Let me just get this thing started. This is for educational purposes only. For investment advice, please consult the licensed investment advisor. Now, if you're new to Greenbridge, all right, hold on a second. If you're new to Greenbridge, please make sure that you check out our website at greenbridgeinvesting.com. Also, register for the YouTube channel here, because every time I do a live stream, you'll get the email notification from YouTube. If you like my video, please press the like button. And if you can, share it with your friends or your social network. It'd be a really big help since I'm the one that has to do all that type of stuff, okay? So let's get started here. First thing, oh yeah, by the way, for those of you that are new or the people that know how this works, share the symbols or markets you'd like to see in the channel now. So once I complete my analysis, I can go over your symbols. Okay, I know I'm running behind today, so I'm going to try to keep this session less than an hour if I can keep my mouth shut. All right, so let's, hey photo guy. So let's, all right, so I have Bitcoin up here, but let's take a look at the stocks first because that's the title. Okay, cool. All right, no problem. No problem. But I mean, there's, you know what, Forex, well, again, we don't have a lot of Forex traders in our group, based on the survey that I've done. But, it's still an instrument that you can trade and there's opportunities there. Same with CFDs. But most of our people want stocks and Bitcoin and altcoin, and that's fine. Trade is a trade, especially on a technical level. So let's take a look at, let's start with the renewable energy sector, okay? And I want to start with Run. You guys familiar with Run? This one, I believe Powell may even have brought this one up a little while back. And boy, would this thing have a run. That's probably why they call it Run. And now it's pulled back, okay? Now, I've been waiting for a pullback in this thing. Look at this. What a nice pullback in this stupid stock. We want to know the inflection points, right? And we have one around that area right there, which is around 60.5. So that's an interesting location. Now, we don't exactly have a reason to buy this thing just yet, but we're getting there, okay? We have the possible higher low, but what's missing from this is more stable structure, especially after such a sharp retrace, right? I would like to see something more than just a single bullish candle. Although we don't have really a lower high before it, not really. On a smaller time frame, this would qualify as one. But on this time frame, there's really nothing there. But because of that steepness, I would like to see something besides an inside bar. Okay, maybe we'll get a failed low or something along those lines. And this one is a nice long candidate. Now, let's take a look at another one, Reggie. Now, again, the whole reason why I'm bringing these up is because of the technical positions, okay? Hold on. Hey, DJ, good to see you. So just like, the whole sector is pulling back. And you have to keep something in mind with these. They're like the cannabis sector. They're all hot until they're not hot anymore. So there's, they have their reasons. It could be political. It could be whatever. I don't really care about the fundamentals. If you watched yesterday's Talking Markets show, Andrew and Henry, they like to get into fundamentals all the time because it's just, I guess, it entertains them, or, it's kind of like porn, I guess. I don't know. But the reality is fundamentals are really not important for short-term market timing. They're not really going to help us. Okay. In fact, what they usually do is they'll distract you into having an opinion, and that can allow you either to miss an opportunity or get into something that you really maybe you shouldn't be getting into at all, because you think, oh, gold is strong or whatever, some opinion, and you're not following the technical cues, which is really the reality of the market. Okay, so we have another pullback here in Renewable Energy Group. This is Reggie. I know Powell definitely brought this one up, and we actually called this as a trade of the week, which never actually activated. Okay, because we had a buy limit just like the one I sent out earlier today. We used a buy limit. This buy limit never filled. Okay, this thing still went to its targets though. So I know someone that actually shorted a put on that recommendation and made out nicely. I wouldn't recommend selling puts on these things unless you have a lot of experience and you have no problem dealing with taking delivery of the stock. He has the experience, so fine, whatever. But that was his choice. I would never suggest that. Anyway, the point is we have a pullback and there's no reason to buy this thing right now. Okay, so as far as the renewable energy sector, what's another one? Can you guys give me another renewable energy stock besides Sun and Reggie? Any other ones on your radars? And I will take a look at it to compare, because out of these renewable energy, I want to know which one is going to offer the best opportunity. And right now, I'm really interested in Run, right? I'm interested in this one because it's had that nice steep pullback. It's close to its inflection point and it's beginning to stabilize, where Reggie is not. Okay. Really? Reggie, I thought that was 4. I didn't know Reggie actually filled. I thought it was because the buy limit was 48.25, and what's the low on this thing? 45.31. Oh yeah, okay, right. I thought this. I get confused, but yeah, because we had another one, FOUR, which is not a renewable energy. Look at this ridiculous one. This one had the same thing. It filled, stopped out, and then ran. So in these situations, the best thing to do, if you get stopped out in one of these, but then you see it reversing again, it's at your discretion, especially if it's a trade of the week, because a lot of times we may not update these, but it's never a bad idea to get back in, especially if you can keep the stop basically at the same area, because these things, they're noisy sometimes, and I may put that stop a little too tight. Okay, but that's what the idea is. You can always get back in. Now, any other renewable energy that you guys would like to see? Hey, Michael, nice to see you. So let's take a look at the China trade stocks, all right, in comparison. So China trade, stocks like BIDU, Baidu. Oh man, it broke out. Did Andrew call this? We talked about this stock, and we were going to call this on the consolidation breakout, but I haven't checked my phone today, so I don't know if he sent this out. Probably not. But anyway, this was a candidate for a China trade stock, but you can't chase this thing now. We were looking at this over the previous couple of days. Look at this thing. This thing is what? It's up $10 today. Wow. Okay. The other one was Baba, right? This one, yeah, isn't that nuts? That was a candidate and we missed it. Okay, so this is a situation here, and this is why I don't like these technical situations. And we're going to take a look at the trade of the week that I sent out too, because it's sort of in one of these situations. I don't like buying these breakouts, right? And this is exactly why, because it's a failed high situation. You're running this risk. Andrew likes to take these, and sometimes they work out, but a lot of times you run into this. And it's like, why put yourself through the trouble? Why take a low probability trade when you can wait and get a better price at some point, most likely, even if it goes back to the middle of the range, which I'm not a big fan of, but it's better than the failed breakout location, okay? Especially if the stock market starts to get iffy, which is what it's doing, okay? So again, out of the China trade, these two, obviously Baidu was the winner there, but what are we going to do now, right? We can't chase that. Now, here's a couple of other ones that I found recently, which, look at this, Wafu. This one here is an educational company, and they're based in China. The recent price action is garbage, right? That's why you can't chase these vertical moves. Look at these two candles. Look at these two recent candles. I mean, that's garbage. What if you bought it here at this high? Now you're stuck in this thing, right? I mean, it's a relatively cheap stock anyway, but certainly one to keep on the radar, because usually when you get these vertical moves, when you get these, that's usually the beginning of a broad leg, a broader move, right? That's why I'm interested in that. But, nothing to do right now. Let this thing, settle. I tried looking for options on this, but my broker didn't show me options, said something about options weren't available on my platform or something. I don't know what that's about. But the other one is WIMI, same thing, WIMI. Now, another China trade stock. Look, same idea, got the little vertical move, much less dramatic, okay, in a couple of inside bars. I mean, they're obviously following each other because it's the same, relationship, the same sector, China trade. We'll call it a sector, even though it's not really a sector. It's not an official sector. It'd be nice if it could break this high right there, but it's a start, right? And it's had this long corrective consolidation after this nutty vertical move, right? The nutty vertical moves, you want to avoid these, okay? Unless you happen to have it from a good price and you're looking to sell it right away, okay, cool. But this is a gamble, right? Then you want to wait until it settles. And look how long this took, right? This took like 2 months. 2 months. And, now it's starting to perk up again. This is where you can measure your risk in a reasonable way. And again, I would like to do something like this with options, but I had the same problem with this one as well. As far as I couldn't look up any options. So maybe DJ, maybe you have access to the options. I don't know, but I don't. All right, so let's take a look. So what we're doing here is we're comparing sectors, right? So we looked at a couple of renewable energy, a couple of China trade, and now let's take a look at the cars, right? Starting with Tesla. Now Tesla's expensive, but it's look at this, right? And I know Andrew mentioned this one in the chat room because he was liking this as a long. And again, he likes these attempted consolidation breakout situations. Now, Tesla, at least, it broke out. It closes in 15 minutes, and it's closing strong, it looks like, right? That's what you want to see. If it's going to break out, it should do this, at least, okay? Now, again, you're taking the risk that it doesn't go much further, and if the stock market pulls back, Tesla tends to do its own thing a lot of times, but if there's a really broad market pullback, this, it may be affected as well. So this is a tough spot to get involved. But how you can use Tesla is sort of like the way we use Bitcoin against the alts, or the way we use the S&P against stocks. It's the leader. It's pretty much the leader in the, electric car space, right? So what are some of the other ones? NKLA, Nikola, right? They're in that space. Now I wanted to call this as Trade of the Week yesterday, but Andrew didn't like it because he said he didn't like the fundamentals. I wanted to say, well, these aren't based on fundamentals, it's based on technicals. But, he insisted on that therapeutics one, so that's what we call it, which we're going to take a look at here in a minute. But look at this, right? So I don't care about their fundamentals. I don't care what's good or bad about them. All I care about is someone bought over here and no one is selling. That's all I care about, because if this was selling, it should at least test the low, okay? It's not testing it yet, which is what? What's that low? 21, basically $20. And it's got this nice higher low. So Nikola, if this thing goes, and this one has options, they may be a little overpriced. You have to really go deep out of the money. But look at the inflection points, right? If this thing goes off of this higher low and clears this inflection point here, which is what, $30? So you're looking at $6 right there, which it's a reasonable test for that inflection point. But if you can clear it, the middle of this range is very within reason as well. There was a lot of price action there, as you could see inside of this consolidation. And these middle of the ranges While they're not good places to put on new positions, they are good places to get out of positions, okay? So that is basically the mid 37s. So there's a lot of potential in this thing, and that's not even a real broad move. That's just basically its first follow-through leg, okay? If it really wants to go, this thing can then test, this area here, which is what, 45? Yeah, the 46s right there. So there's a lot of potential in Nicola. I like this one a lot, especially for options. So something to keep in mind, if you're going to do something with options on this, now we didn't call it officially, but we probably will. You're not looking at front month options here, right? You're looking at like 2, 3 months, 4 months out. You need time on these things because if it wastes more time, you don't want that premium to melt on you. Now that's deep out of the money. So you're looking at $40 calls, $45 calls, and they should be somewhat cheaper, maybe a couple of $100, maybe less, right, per contract. Now, Andrew brought up an interesting alternative to doing something like that is you can buy a deep in the money call, okay, without all the time. So you can buy, I guess 2 months out or something, or a month out. You're going to pay a lot more for it, but it's almost like owning the stock if you're in the money, right? If the call is in the money, if you get a move in the stock, the delta will be higher in that in the money call, and it'll behave more like you own the stock. So for every dollar the stock moves, you may be making like 70 or 80 cents, maybe not dollar for dollar, unless it really goes deep in the money. But that's another alternative you can consider for something like this, okay? But definitely like the potential there. So that's the other car maker now, or basically one in that space. Now a couple of other ones. Let's take a look at Workhorse, right? This was a big winner for us, and now look, we shorted a put. I know Andrew shorted a put on this one. Called that one like a week ago, and it's that short put was worth something at one point, but it looks like it gave it back, right? But where's this thing going? It failed to break out of the consolidation. You see why I don't like these type of consolidation breakouts where you can get that failed high situation? You see that? Now, obviously, when it attempted to break out, it closed weak. That was a clue right there that it was going to fail. But what do you do with the short put? Can you get out of that and take a small loss or take your gain? Sure, you could do something like that. We don't, because we have the short put. We can't babysit all these positions. So we're willing to buy the stock. The whole idea behind a short put is to buy a stock at a cheaper price, right? But you get paid to buy the stock because you keep the premium. So if we have to buy Nicola, take delivery of Nicola at, well, I forget the strike price on that thing, and we got paid to do it, fine, no problem. I mean, where's this thing going to go? To zero? It might, but, it's probably going to at least attempt to, find support at this old inflection point range low, and we'll have an opportunity to at least get out of it for something, if not break even, okay? So, or we can always sell a call against it and take some more premium in as well. So there's a lot of flexibility with something like this. Either way, it's at a good location, okay? So just, reviewing some of these stocks, right? The China trade, those were a little iffy because, Baidu is we missed it. And the other one, what are you going to do with it, right? The other ones, you need to wait until there's some more stability, right? The electric cars, though, and the renewable energy are in much more interesting locations. Although this one doesn't have stability yet, Nicola has some stability in it, right? So that one I think is a better choice comparing the two. Now there's another one, FUV. Here's another one. Now look at this. Oh wait, is that it? Yeah, FUV. This one is trying to break out. Look, obviously following Tesla's lead. Look at that. Okay. What are you going to do with this? You can't chase it. You just have to let this thing go. It's going toward that range high. But the reason why I'm bringing this up is because these are good stocks to put on your radar, especially if it pulls back and tests the middle or the low of the range. It would be ideal if it can test, like this area here, which is what, like the $6, high fives, low sixes. If it could do something like that, that may be an opportunity to get involved in this thing, okay? Also another one, NIO, N-I-O. Oh. Now this one, look, this one worked out. Andrew called this one. like a week ago as well, based on this consolidation breakout. And look, it toyed around. It looked iffy at times. Now this thing is vertical, right? Look at this. Any of you guys take NEO? Any of you guys in this? I mean, you can't argue with this stock. It's just strong, right? Higher lows, higher highs, and you can't chase this thing now. Anyone get NEO? Okay, no problem, DJ. And if you didn't get it, it's okay. But wow, definitely one you want to put on your radar. And if you're in it, there's nothing to do here. I mean, we have our targets, right? You just let this thing do its job. You have a gap. This is like a gap and go. You got this one, DJ? This is like a gap and go. Look at that, right? It gaps like that, and now it's going. This is where, you know, all your Robinhood traders are jumping in and, look at NEO, right? And this is where, you know, we're reducing risk. We wouldn't buy something like this. We bought it earlier. And that was a great call by Andrew, which, you know, it had its risk, but nice, Hamid. It had its risk, and it worked. Okay, they don't always work out like this, but that was a good call, I have to say. I would hesitate on a trade like this because of that location. I'd prefer the pullback. But as you can see, I'm not always right on those, right? I mean, look at this. You can't argue with this. So nice move on that. Now, so those are the three groups. I wanted to, you know, point them out. I wanted to show you some comparisons between the three groups. I like, you know, some of those cars like Nikola. I really like Nikola, and I also like the renewable energy. I like Run. Okay, I like the location and just need some stability there. So I spent a lot of time on these, because, you know, I had quite a few stocks to review, but that's, you know, where the opportunities are. Okay. All right, so I want to still cover Bitcoin, and I got to cover Euro stocks and stuff. But let me just go over real quick. Nice, DJ. Let's talk about the trade of the week. So if you're new to Greenbridge, we send out, if you're a free member, we send out a trade of the week basically we announce it on our podcast, and then either that night or early the next day, I'll send out the idea. So Andrew picked this one, okay, CRISPR Therapeutics, and this is a gene editing, whatever, okay. Obviously the stock is strong, you can see the structure, but look at today's candle, right? This is why I'm so against, why I'm so against buying at such a situation, right? So what's this thing at? 101 right now, it's minus $1.12. If you notice, and I just want to emphasize this, if you notice, our buy limit is at 94.55. That's like 10 points lower. Okay, less than 10 points now. But at 103, it was like, 9 points lower than the current price. Why did I do that? Why did I pick that? Because why would we take this risk up here? This is unacceptable. It's too high of a risk, especially when you have all this room for it to pull back. So it's a buy limit. Some people, if you don't know, if you're like brand new to this and you don't know what a buy limit is, you really should not put any money on the table at all. You should just paper trade. I had someone in a TradingView comment ask recently, because I put a Bitcoin trade in there and I put buy stop, and he writes, so what do you mean by buy stop? It's like, man, if you don't know what that is, you should not be risking real money, okay? Anyway, so that's why we use the buy limit, and I put the stop 10 points lower than that. Now here's a note about that stop, okay? If you notice, this stop loss here is 10 points lower at 84.55. That stop may adjust. The thing is, we have no structure here right now. We have nothing to go by. So I went by this previous structure back here. Okay, you could see this price action back here. And that may change once we get our reversal, if we get the reversal in that 94.55 area. It would be nice if there was confirmation following a test of the price. We have the buy limit in there, which means we're risking that it just goes there, and we hope that it turns, okay, without the confirmation. That's why I put the stop so much lower, because there's nothing there at the moment, right? So that's another risk that you have to consider. It's not always a bad idea, but you just have to understand what you're facing, what you're up against. Okay, so that's the trade of the week. We send these out to all our members for one reason, and that's because we want you to see what our trades are like. Obviously, we send these by text and email to our members. And we send a lot more, not just, one stock per week. So anyway, all right, so I want to I'll cover that. Let's go over Bitcoin real quick, okay? Because we've been in this trade now for, what, 2 weeks almost? And this one's been working out nicely. I got laughed at, of course, when I shared this one long on TradingView. And now our members are laughing. So it reached our first target, and it went to the resistance, okay? And this is a chart that I share on TradingView. Here's the thing. So right now, it looks like it's going for the pullback scenario. And I have the line drawn on this chart. I drew this line on Sunday. You can see it, right? I draw that line so it kind of gives you like a visual idea of what I'm anticipating, okay? So 11K, if we can touch that level and test it and reverse there, that would be a new swing trade long idea that we will share with our members, okay? Even though we're still in one. So at this point, we still have 2/3 of our position. We just want to let that thing ride and do its job. Nothing to do here. So even though it's not looking so hot, it looks like it can pull back. That's just what markets do, right? It's nowhere near our stop. One thing you can consider is you can raise your stop to break even in a situation like this. We typically don't, because sometimes it'll just go back there and tap you anyway. But if you do, that's really like a personal thing. If you do that and it taps you out, your trade is still green, okay? Because you locked in 1/3. That's why we reduce risk in those situations as soon as we can. And that was a good level, because right now, look, we're at 11,350. It's basically where we took off, 1/3 of our position. So nothing to do here, but let this thing do its job. We have this resistance zone in the way, which is a tough zone. I've been talking about it for a while. But if we do get the higher low off 11K, I'm anticipating at least a test of the zone, like at least into the middle of that zone, okay? Which should be reaching our second target in that type of situation and give us a new trade to send out. All right, so that's Bitcoin real quick. If you have any questions about it, please let me know. And let me see, do we have any other ones like Link USD? I know some people were very interested in this, and it's not so eventful, right? And it's following Bitcoin. It's got the same patterns. So it's just a lot slower. All right, so keep in mind it's all the same trade, and that's why it's so important to realize that. All right, so let me see. I'm talking for a while, and I need to change the subject here. So let's see where we are. All right, let me just jump into Forex real quick so I can just show you what I'm looking at there, and then I'm going to go to your stocks in your markets. So let's take a look at Forex. And thank you, everyone, for all of your suggestions here. I really appreciate the participation. So this euro, all right, I'm very interested in the euro. The pound is a little more dramatic, all right? The euro is a little more tame. Here's the pound against the dollar. And these markets, as you can see, they're not bearish. They have not been bearish, right? The US dollar is not bullish, in other words. And even though we had recent price action that was ugly, okay, that corrective move, all it went to was a inflection point, right? And it reversed off of there. So that's why I'm not, we tried to go along, like dollar Canadian and dollar franc to try to capture some of that dollar retrace, but I was not too enthusiastic about that dollar changing its trend, and so far it has not, right? Which means if the dollar is still bearish, these things are going to go higher. In fact, if you look carefully, I sent out this trade. I sent this out, not a trade, I sent out this chart a couple of weeks ago, and you can see the little lines I drew in there, right? So I was looking for this higher low situation, and here we are off of a failed high area, and right away, price is trying to recover, like right away. So this is a little too aggressive for us to share as a swing trade idea. If you like it, you can take that, you can consider that on your own if you trade Forex, but usually with the pound, you need very wide stops. Okay, the low here is 28.62. And right now this thing's at 30.20. So you're looking at like 150 to 200 pips on the average on this thing. But it's got some room to run. Okay, so you should be making at least 150 to 200 or something like that, at least around your first target. If you're going to go less on your first target, your second target needs to make up for that to round that reward risk and make it worthwhile. Okay, but the pound, I get it, is wild. The euro is more tame. And look at the euro. So same idea, okay? This euro is not weak. Even though there's some news here and there and blah, 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 it bounced off of an important support level. And that's a nice initial move. Looking for the pullback now for a long. And look, today we're getting a potential candle. I mean, that's not an inside bar just yet, but this might be a possibility. Okay, we'll see how this closes. Closes in a couple hours, or about an hour, I guess, basically. 1770 is the high. So maybe 1795 or something might be the long for that, or maybe I'll wait another day and see if it can test a little lower and see if we can get something out of that. But as long as this thing is staying above, what is this? That's 1688, basically 117. As long as it's staying above there, then it's basically delivering a higher low. And if you get that higher low, it should lead to the higher high. Some may argue that you have a lower high. Okay, but the thing is, what trend are you looking at? Are you looking at this trend, or are you looking at this, this lower high compared to these highs, which is not a trend? Okay, that's not a trend. It's a consolidation that is correcting the broader bullish trend. Okay, that's people mix that up all the time, and then they argue with me on TradingView, telling me that Bitcoin's going to 8,000 or 5,000. I don't know where they come up with those numbers. Anyway, all right, so that's the Forex pairs I wanted to run through real quick. I am liking the euro as a long, and I may send that one out. All right, so let's get to your questions. All right, so let's say hello, DJ, photo guy. Okay, DJ, someone mentioned GS. You said even if the earnings are good stock. Okay, so let's talk about that real quick. Goldman Sachs. Now, we talked about this, right? I forget who mentioned it, but if I see his name, I'll remember. His question was, how would we go about shorting this? He was interested in buying puts. I remember because I misunderstood his initial question. And the puts are probably expensive on this stock because it's an expensive stock, but it's at a range high. So I don't care how good the earnings are. I don't care how good or how bad. I wouldn't buy this thing at a range high. It's a great stock. It's a great company, all that stuff, good fundamentals, but not at these prices. So yeah, so what? It's actually not that bad today, right? I mean, I don't know if the earnings are out yet. So yeah, but this thing has potential to test the middle of the range or the low of the range, and this is a market stock. So it will, if the S&P pulls back, this will probably follow. Okay. Speaking of the S&P, let me just pull up those real quick because we do have trades in the Nasdaq. Okay. We sent out a trade yesterday to our members on the Qs and on the NSX CFD. So you had two choices. People that trade Forex can trade this one, or if you want to trade the stock outright, you could trade the Qs. Now, look for it was a very aggressive short which actually activated today. The short idea was based on the pin bar. You see the pin bar? I saw the pin bar developing and I said, we need to call this, okay, as an aggressive short. Why is it aggressive? We're fighting a broad bullish trend, but we are in a resistance zone. We're in a high vulnerability, we'll call it, high vulnerability resistance zone where selling activity is likely to enter. And look, here it is. It's something, okay? It's not the best, but it's something. Now, am I expecting a bear market from here? No. Am I expecting like maybe a reasonable pullback to a previous inflection point? Yeah. And that's the idea behind the trade. That's why it's aggressive, okay? It's counter trend. 11,550 area on the CFD. So that's a couple of hundred points, right? There's nothing wrong with that. If it can deliver such a move. Can it go lower? Anything is possible, but that's, basically the idea. So it's aggressive because we may get like a much less of a higher low. It may turn into a strong reversal and just go higher. But the difference, it can test that high. But the difference between shorting here and shorting something like here in the middle of nowhere, at least you have something confirming that you're not the only one, right? This is confirmation. So we don't know how far it'll go, but it's worth taking a chance, and we can measure risk clearly. In a situation like this, because I know, Andrew, we had shorted some Qs back here and stuff, you get caught in these early shorts and they just keep going on you, okay? And it's not necessary. At least here, we know where to get out exactly if we're wrong, right? All right, so I'm bringing that one up only because we have a trade in that. Now, let's see what else we have here. Michael. So LC. I started a trade at 45, got to T1, but don't like the close here. Okay, LC. Let's see, LC. Lending Club. Oh, I think you've mentioned this one before. I know Andrew's mentioned this one. Now, so Michael, you're saying that you're in at 485. Okay, so let's see. 485, that's around here. Right about there. Okay. And all right, so here's the thing. This stock obviously has been fighting a not very nice structure that's very bearish. Okay. Not only you have a series of lower highs and lower lows. Now it stopped going lower, right? Failed to make a lower low, but you haven't taken out any significant highs, which is basically 6.5. Hasn't taken it out. So it stopped going lower, which is a start, but the overall trend you can still argue is bearish. So Michael, to answer your question, if you want to lock in some profit or you're thinking about raising your stop to your entry, it's not a bad idea because this is likely, especially if that Nasdaq and S&P have that minor pullback, this thing is likely to test its low based on that structure. Okay, there's really nothing strong about this. I mean, does this, just in comparison, does this thing look like, run to you, right? Like, let's just look at a quick comparison. Look at the difference, right? Does it look like that? No. So this thing is likely to test that low. The structure is just not with you. So yeah, I would reduce risk. I'd be more what's the word I'm looking for? I'd be more serious about reducing risk on that one. I'd be more, on top of it. Okay, so thank you for asking. Okay, right. So Reggie, so I'm just going through the chat here. CSIQ. Okay, Hamid. Let's see. CSIQ. Oh wow. Okay, so there we go. Right. Look at that. Nice strong stock. Oh, solar. So obviously this is part of that renewable energy sector. Thanks for bringing this up, Hamid. Broke out of this consolidation here. Let's just start with the inflection points. So we got one like around here somewhere, right? Oh, let me draw my line right around there somewhere. And then you have one around here somewhere. Okay. Remember, these things aren't exact. People have the tendency to draw them at exact points, and the market's not exact. Now, at this moment, this thing is nowhere near those, okay, and it's showing a potential higher low. So this is a tough call here because one single candle, I mean, the stock is strong. So here's a couple of things you can consider. I don't know if you're in this or if you're thinking about getting into this, but a stock like this, I would be more open to the breakout. Okay, because you have this is very shallow here, this higher low. And this overall structure is so strong that this could be like another Hibbett Sports, a very similar pattern where Hibbett just went crazy after it had that breakout, but it was very similar to something like this. So you're basically looking at like a breakout of 42.25, something like that. So that's one thing to consider. One way to play this is, you do have a green candle closed. Today's candle is a little iffy, but if you can take out this high again tomorrow, what is that, 40, so like 40.5 or something, perhaps you could put on a starter position, okay? Maybe instead of 100 shares, you put on 25 shares. If it breaks out, you put on another 25 shares, that kind of thing. So at least you're averaging into it, something that's going your way, okay? And your stop obviously is going to be defined by this low at 37.5. So if you get involved in this thing, so let's say you buy 25 shares, okay? At, right now, let's say at 39.5 or 39.75, let's just say. And next couple of days, this thing is pushing the low of, what is that low again? 37.5. You should be out of it. Okay, like, yeah, you might be banging out a low, but that's the risk that the structures, the risk that we can define from this structure, and maybe it'll give you more of a failed low type of situation at some point, which you can get back in. But I really emphasize that because of the aggressiveness of this type of entry. Okay, like if it goes to the stop, just get out. Take the loss, because you don't want to get caught if this thing chooses to pull one of these moves and go all the way over here, which is like in the mid 30s, kind of like, run, where that had that steeper pullback. You don't want to get caught in that. And a lot of times, it starts to go, lures a lot of longs, and next thing you know, it's 10 points lower. So that's one way to at least deal with that. And if you start with a small position, if it does that to you right away, then you won't be so bothered by it. But thank you for bringing this one up, CSIQ. Definitely want to keep this one on my radar. Okay, so let's see what else we got here. Okay, so did I miss that one? WYNN. Let me see here. I'm just going through. Okay, no, here we go. All right, so win. WYNN. So this is a casino, right? Yeah, Wynn Resorts. So let's take a look what we have. We have a support level right there, which obviously it's been holding. Broad higher low situation, okay, from the March recovery, but you're still up against this, okay. So I want to see resistance levels. You have one here, right about there, and then you have another one here. So 89 is your first resistance, like 89.5, and then like 114. So, all right, and right now you're fooling around at $71. I can see what you're going for here. Okay, DJ, I can see the potential double bottom situation off of a pretty significant support, and it's got plenty of potential. Okay, not bad. Okay, the only thing that I'm concerned about is that broader trend isn't perfect, but it doesn't mean this thing can't test its range high. And the risk is pretty good here. Okay, you can define your risk pretty well. The low is basically what, 72. You can round that a little bit lower, maybe around. But no, I'm sorry, that can't be the low. Where? What's the low? 68. I'm sorry, 68. So you figure you're going to be taking about maybe 4 or 5 points of risk, but look at the potential, right? If this thing takes out this little minor lower high at 75, you're looking at going right back into the 80s, and that's basically that little minor range high. So a lot of potential in this. I'd love to know what the options are on this one. So yeah, thanks for bringing this one up. I like it. I definitely like the idea. It's a little aggressive, but I like it because you can measure that risk and there's plenty of potential. Okay, these things of course are going to be affected by all the drama going on in the world, and people, can they go to the casinos and blah blah blah, right? All that stuff. So just something to keep in mind there. It's going to be news sensitive. But if that thing has cheap options, that thing has a nice little pop, that could be like another NYCB, which never went anywhere. Look at NYCB. Oh, it's trying again though. Look, it's trying. Right? It's kind of the same idea, except the chart isn't as nice. Anyway, okay. But we took the options are so cheap on that one. It's like, why not? All right. Let's see what else we got here. So VMW. All right, DJ, let's take a look. VMware for a short. Yeah, DJ likes these aggressive ones. All right. Well, right from the start here, you're definitely at a resistance. Okay, can't argue with that. You are fighting a pretty. This almost looks like what we want Wynn Resorts to do, right? This is the result that we want. It was stuck in that consolidation for a while, and now look, it went to the range high. So you're looking for a short. Well, let's look back a little further and see, how this inflection point looks historically. It's not a horrible idea. You may get that, you have a pin bar today developing, so it depends on how you go about it. This thing, this is a pretty steep move, and obviously if it breaks out, you can get caught in that. But if it fails, you're looking at the middle of the range, a test of the middle of the range, which is right about there. So 147.5 area, and you're at 155. So that's worth something. I guess you would do that with puts. You go long puts on that, because shorting the stock is a lot riskier. Now, one thing you guys can consider, if you're more advanced with options, or are they? I didn't know that. Okay, the win options are expensive. Yeah, that's a pain. One thing you can consider about, and that kind of goes along with this, for expensive options, because there are a lot of stocks that are in these expensive option situations, okay, like like Workhorse and some of these other ones. The options are kind of ridiculous. One thing you can do in those situations is you can do vertical spreads and take advantage of those inflated premiums. So a vertical spread, in this case, you'd be looking at a bear call spread. Now, this may start to sound complicated, but vertical spreads are the simplest option combinations next to covered calls or covered options that you can do. So you would short the near the money or at the money call, okay, and collect a very large premium for that. And you would do these same month, by the way, same month. You could do different months, but then that's a different strategy, okay? Or you can even do a calendar spread, but that's something else too. So I don't want to get complicated with all that. So we're just going to talk about a vertical spread. You can short the at the money or slightly out of the money call and then buy a deeper out of the money call. That deeper out of the money call should be cheaper, okay? But since the options are inflated, you may get a ridiculously higher premium for than what you pay for that long call. The long call will protect you in case you're wrong. If this thing goes vertical on you, then the most you're going to lose is what you took in the premium and the difference in the strike prices. Okay, so it's something to consider. You could do that on the put side as well. You would do bull put spreads, right? So it's like a short put, except you're buying a put below it to protect yourself. So something to consider with these really expensive option. And another advantage to doing vertical spreads is they don't have the same margin requirements as a naked option because you're covered, right? So your broker is not going to demand very high margin for a vertical spread. All right, so just something to consider. Now again, if you found all that confusing, just don't do it then, okay? All right, so let's see what else. Neo, right? Hamid, I bought a Neo option. Oh, nice. Nice, Hamid. All right. Michael, Nicola, options a bit expensive, 30 strike. All right, so, well, you know what, Michael, $380, considering what some of these other ones are, $380 is not too bad. But here's the thing with something like that, Michael. And January might even be a little tight. Maybe you give it, April maybe. And they're probably going to be $4 or $5 per call, per option. But one thing you could do with those on like something like Nicola is you can put, let's take a look at the stock again. You can put a bid in there, maybe like $1 lower or something. And if there's any little noise or any little pullback on this thing, they'll fill you. They will most likely fill you. And you get it at a great price. And then you have all this time. That's really the way to get into those options. And a lot of times you won't get filled. But trying to get the thing right now at current premiums, it's a tougher game. Especially one thing you definitely don't want to do is you don't want to pay offers, right? If you really want the option, just bid the middle of the spread. Usually these things have wider spreads, especially if there's a lot of time in them. Bid the middle of the spread. They'll fill you in the middle. All right, at least you don't have to pay the full offer. All right, so, okay, so I think I answered that. Let me see what else we got here. Just going through the chat. So Nicola, right. So it's exactly right, Michael. But that's where you could take advantage of that. Any stupid negative news, and you could fully take advantage of that. And now you get an option with a lot of time in it, and it's cheap. And now you have a high potential option with a lot of time, which means now, now all that thing needs to do is pop up a little bit, and that thing is green on you. All right. Oh, yeah. Oh, really? So, yeah, Michael, I don't follow the earnings on Goldman Sachs. I'm not surprised. And the stock isn't reacting. But that, you know why? It's priced in, right? This is very common behavior. And this is why I always tell people, don't use logic when it comes to markets. Because you're like, oh, Goldman Sachs, they had, great earnings. Yeah, this thing should be, $50 higher. But it's priced in. Obviously, everyone knew about the earnings and they were buying it all up. Now they're selling it to all the Robinhood people who follow logic, okay, or human nature, or whatever, thinking things like that. So buy the rumor, sell the news. Very common with those. Okay, they can have the greatest news in the world and it doesn't go anywhere. So good example of that. Okay, Florin. Long silver. All right, so let's take a look. He's looking for a long in silver. XAG/USD. I haven't been covering gold or silver. It's just been so busy with all this other stuff. So this is obviously going to follow gold, right? Now, so if you want to buy the CFD of silver, you have a lower high right here. Now this thing is consolidating. Clearly gold and silver are strong, right? Because the dollar is weak. And this is the same idea as the euro and the pound. Well, it's all the same idea, even Bitcoin. So on something like this though, when these consolidate, especially if you're buying the CFD, they can be very difficult, okay? So that's why it's good to wait for particular levels if you're going to do anything. And on silver, that's around the low 20s, like the 22 area, something like that. If silver can give you test that price and then give you a green candle, at least you're buying a potential double bottom. Maybe it tests lower, shakes people out, and you can get something there if you get a pin bar. Those would be the ideal prices in terms of reward risk and probability. This price is just a kind of a random noisy price. It may go higher, it may go lower. So I don't like this current price. Now, especially in front of that lower high. Let's take a look at gold, right? Because gold is really going to give you your cue. XAU, USD. Now, you know, obviously gold is doing the same thing. Now, gold was tricky, and this is what I'm talking about. So gold had this consolidation for a while, right? I'm sure many people got long, thinking, oh, gold's going to break out, and it's going to go to 2,000 because I read a newsletter, and it said gold is going to go to 5,000 by December, right? You know, gold is very dramatic like that. A lot of conspiracy theories. And then they all got caught, okay? So now it's trying to work its way higher. Okay, nice, but it's noisy, very noisy. I wouldn't do anything with this. I would wait for a better level. Like, you know, maybe a test of the 1850s or 1840s, something like that, right? Around there would be ideal. If it doesn't deliver that, then no problem. You know, we'll find another entry on this thing. But right now, it's still in that consolidation. So there's a chance that it can test, you know, those levels. And that's your ideal place. Now, maybe you don't want to wait, okay? Maybe you're like, you know what, but I really want this thing. And it's a low price and I can handle it. Okay, no problem. Then what you can do with, that's a good idea, DJ. But you know what, DJ, people have a hard time understanding my simple options ones when I'm just talking about puts and calls. I can only imagine if I go over, what do you call it? If I go over combinations, I would do just one on vertical spreads only. Okay, right. No, there's no gold in Fort Knox. Right. So I would wait for something like that because again, we're still in this consolidation, right? And that's really the point there. There's no, oh, but okay, I lost my train of thought. So what I was saying is if you really want to get in, just like with the stocks, you can average in, but you have to do it very carefully. You know, if you can use micro lots, that's the best way to do it because even then, this thing moves, it can cost you, you know, it can start to add up, even on a micro lot. So, you know, you buy one, it pulls back more, you buy another one. The idea is you're buying something that's generally strong, right? Gold is not a weak market. You're just taking advantage of noise. So that's one thing you could do, but you have to be prepared. You have to be prepared in case it breaks and looks ugly because it's gonna be, you know, somewhat painful. Okay, if it does something like that. You also have to be prepared to buy more if it reverses. That's what's going to give you the great prices and a great average position. Not easy to do, and it's you know, some people would say that that's a bad idea, that I'm suggesting a bad idea because, you know, you're saying add more to a losing position, but it's not a weak market, okay? And this is likely, if anything, to test the middle of the range again. It's probably not going to go to 1,000 unless fundamentals change. Like perhaps the Federal Reserve changes their tune and they say, oh, we're going to raise interest rates for the next 5 years. Okay, great. Gold will go back to 1,000. All right, but until they do something dramatic like that, gold will probably consolidate and you're buying something that's generally strong. The next best thing you could do is just buy physical and you don't have to deal with the leverage because the leverage is what makes this painful. If you're buying physical, you're at 1-to-1 and it doesn't matter. If gold goes to 1,000, you'll be like, all right, so what? You're not going to get margined out of anything. So those are some other things. We do have a whole webinar on physical gold and silver, so you can check that out. I talked about paper versus gold and silver in that webinar. It's in our webinar library. I haven't done a promo yet in a while, but all right, you guys know the promo. I'm not going to do it right now. I'll do it before I close this thing out. All right, so that's gold. Thanks for bringing that up. Let me see what else we got here. Right, so any other questions? I think I got to everyone's questions. How much time? Oh, okay, I'm still less than an hour. Not too, I wanted to do less than an hour, but I was thinking like a half hour. So I'm almost at an hour anyway. All right, no problem. I want to always make sure I answer everyone's questions. Have I answered all your questions? Do you have any other questions? How's Neo USD doing? Look at this. This is why I didn't call this. See this? This is why I didn't call that. Because I wasn't too happy with the way this thing was behaving to begin with. As far as altcoins go. All right, enough about that. How about cannabis? How's that mess doing? Yeah, you see, this is why you don't chase these either. These are garbage stocks. Like I said, I wanted to sell a call on one of these because I have the stock. Not to be confused with naked calls. But all right, so that's pretty much where we're at. Yeah, so DJ's saying here that I should do a webinar on options combinations. And like I said, if I were to do one, I would do it on just one combination, and that would be the vertical spread, because vertical spreads are the easiest combination, and they're pretty effective. Whether they're credit or debit spreads, they're pretty effective. The thing is, with those type of option trades, you're going to make a lot less money, but your probability of coming out ahead is better because you're protected on one side, okay, as opposed to having a naked call or a naked put, which, yeah, you're going to take in a lot more premium, but the risk is a lot greater, especially if you get caught in something like CGC, at $40 and it goes to 20 because you took delivery on a short put. Okay, so anyway, please send Nicole a trade idea. I will take it. Okay, DJ. Well, yeah, so that's definitely, if I'm going to send that, I'll probably do this tomorrow. I mean, the market's closed now. Maybe I'll send it out tonight. I don't know. We'll see. But definitely, I'm definitely gonna, I'll send this out. I'll send this out with the specifics in there. And I'll even mention, I'll make a reference to the options, maybe. Something like this. Well, something like this too, if you're interested in buying the stock outright, then this would be a good candidate to sell a put on, just like Workhorse. Speaking of options, right? You can sell an at the money or even out of the money put. And you get a decent premium for it if these premiums are inflated, right? That you want to do front month, okay? And this thing goes, at least you're participating in that. You're keeping that money as well. So that's one thing to consider. If it doesn't go and it pulls back, now you're going to take delivery, or you can take delivery at that strike price, but you still keep your premium. So you're buying the stock, but you're getting paid to buy it. Yeah, it's going to be against you, but it's going to be against you minus whatever premium you took in. Okay, I mean, how much lower is this thing going to go? Yeah, right, it can go to zero. I know, but just that's a chance you take. Keep in mind, if you have the 100 shares of stock that you took delivery on, you can always sell a call against it then and try to take in more premium. It sounds easier. It's easier said than done, but those are just some choices. Okay. Oh, okay. Oh, nice. Well, you know what? Because again, when these stocks are not complete garbage stocks, right? And the market is still generally strong. We're not in a bear market. So these things will have a tendency to find support somewhere and at least try to go higher, right? So if you're buying into lows, you're probably gonna average into a lower price. It's gonna work its way to a higher average price, and you'll have an opportunity to reduce your risk or do something like that and lock in profits, okay? The mistake you don't wanna make is you just don't wanna get too big too fast, especially buying into a high and then you get caught. That's really what hurts people, okay? But if you do that, if you average into it properly, you can do really well, and it's not really stressful because you're managing your risk through position sizing, okay? So we like to do that with our long-term stuff, like Bitcoin and stuff like that. Okay, cool. All right, everyone. So if I answered everyone's questions, here's what I'm going to do now. I'm going to run through my little promo. All right, so if you're new to Greenbridge Investing, please make sure to check out our website at greenbridgeinvesting.com. Also, if you're new to the channel here, please subscribe to the channel, like the video if you like the work that I do, and also if you can, share it with your social network. That'd be very helpful, and I appreciate it a lot. Also, just so you guys know, since I have a bunch of our members here in the channel, we are planning to raise our prices, as I put in the email, But if you remember, like most of you here, you will not be affected. All right, so I'm going to say that again. Your rates that you're paying right now will not go higher. But anyone new that signs up after we raise those prices, obviously they're going to have to pay the higher price. Okay, so we're doing that, for our current members, we're not going to raise anything as a thank you, for one, for your loyalty. And for two, why would we punish you for something like that? But there comes a point where we have to, it just makes sense to raise our prices, but you're not going to be penalized for it. Okay, so I just want to make sure that that's clear. Now you guys understand that, because when you see like new prices and stuff, you'll be able to renew at your price now. I don't want Andrew to get like 20 emails. You're going to raise my prices on me? So okay, don't worry, not for you, only for new people. All right, and if you're new, you should do our free trial, check things out, and if you're going to sign up, sign up at the prices now before they go higher. Okay, that's my call to action. All right. Yeah, Michael, we're going to raise all the prices. We're going to raise across the board. We're going to raise them. Obviously, if people are paying the yearly price, it's going to be less than the shorter term price. But members that are paying current prices, no matter what you're paying, whether it's monthly, 6-month, or yearly, those prices will stay the same for you. Okay, so I just want to make sure that that's clear. I know. What makes it even more ridiculous, Michael, is if you look at what our competitors charge, especially some of these fake gurus like on TradingView, they charge like 10 times what we charge like in a month or whatever, and we charge like in a year. What they charge in a month, we charge in a year, okay, which is ridiculous. But what the ridiculous part is, people pay it. People actually pay it, and you're paying for fake gurus. So anyway, enough about my rant there. All right, you guys, so I'm going to wrap this up. Thank you again for your participation and for all of your suggestions here in the channel. If you have any other questions, please share them in the chat room. We have a free chat room. You can go in there too. If I didn't get to your question, just go in there, put it in there, and we'll get to it. All right. So yeah, well, Michael, we priced it that way exactly for that reason, so that you're not competing with the subscription, right? We want our members to actually make money. Imagine if you were paying $300 a month, which is what some of these people charge, and people pay it. $300 a month. It's like, are you kidding me? But there's a reason why they charge so much. And it's not because of the quality. It's because they know that most of these members are not going to be members for very long. So they're trying to get as much money out of you as they can, as quickly as they can. Because, they figure you're only going to be hanging around for maybe 3 months, 6 months, and then you're out. That's why they charge thousands of dollars for education. And they charge, $300 a month or $200 a month for a chat room. Okay. So anyway. Sure, one more suggestion. Okay, DJ. Can you add a search option for the chat room? Then we can go back and look for charts. Oh, that's interesting. Well, DJ, the thing is, our chat room, it's a particular software that we use. So the best I could do there is suggest that to the software provider, because that's not custom software to us. It's a provider that we pay. So that's an interesting idea, though. A search option so that you can go back and look for the charts. Okay, so I can contact and reach out to them and see what's possible in that area, because I don't even think our web guys can even customize that. I don't even think they can do that, but I'll find out. All right, so thank you for the suggestion. Yeah, no problem. But hey, if you ask for the charts, no problem. No problem. We try to do our best to provide them for you. Anyway, all right, you guys, I talked enough. I'm gonna wrap this up. So thank you again for participating, and I will see you all in the chat room or next time. Thank you for watching.